What is going on, guys? Nick here, back with another video. Today I'm going to do things a little different. Instead of looking at a large cap name brand stock, I'm going to take a look at a penny stock. There are a lot of penny stocks out there that catch on, and while a lot are junk companies not really worth anything, there are always a few that end up doing pretty well. So in this video, I'll take a look at Zomedica Corporation and decide if this stock is trash or treasure. I'll take a look at what they do, what's driving the price, and if they're actually worth something, or is this just a pump and dump. So starting off with the chart, it seems like they were trading around 25 cents per share, but spiked up in February, hitting a high a little over $2.50 before falling all the way back down to $1.33. But before I get into all that, we should start with an even better question. What on earth is Zomedica Corporation, and what is it that they do? Well, according to their website, they describe themselves as an Ann Arbor-based veterinary health company that creates products for companion animals, focusing on the unmet needs of clinical veterinarians. Their goal is to provide veterinarians the opportunity to lower costs, increase productivity, and grow revenue while better serving the animals in their care. More specifically, they focus on the pet diagnostics market. These are the tests that veterinarians run when they do things like take blood samples from your pet and then send them off to the lab to check for abnormalities that could indicate health issues. Zomedica lays out in their 10K some pretty interesting stats about pet ownership that explains the pet diagnostics market size. In the US, about 85 million homes have at least one pet, and 93% of dog owning households visit the veterinarian annually. Now, I do want to point out that this is only a measure of dog owners and not the 85 million pet owners. It's estimated that US consumers spent $99 billion on their pets in 2020, but this does include costs like food and not necessarily veterinarian costs. Some quick math would mean that the average household spends about $1,100 on their pet, which seems about where I would expect. Now, I think the most important stat that they pointed out is that the global veterinary immunodiagnostic market is predicted to hit $2.8 billion by 2024 and expand at a compounded annual growth rate of 9.6%. On March 16th of 2021, Zomedica made a big announcement that they were going to start commercially selling their TrueForma product. This is a machine that allows vets to input a blood sample and check for thyroid and adrenal issues in dogs and cats. Right now, when a veterinarian takes a blood sample from an animal, they can't run certain samples in-house, so they usually have to send it out to a third-party lab to have the test run to get the results. This is time-consuming and expensive, and it usually takes a day or two to get the results back. The TrueForma diagnostic product would allow a veterinarian or a technician to test a sample at their own facility, resulting in a much quicker and cheaper testing process. It makes obvious sense that if a veterinarian can buy a device that will get blood sample results cheaper and quicker, the TrueForma product is a no-brainer. But there's still a huge question mark that we need an answer for first. In their last update, Zomedica said in the February 2021 earnings release that complete validation efforts for the TrueForma tests were still underway. This means that they don't yet have the data to confirm all the TrueForma device tests are just as accurate as lab tests. Right now, Zomedica has completed verification for thyroid testing, specifically TSH, T4, and free T4, but they're still in the process of validating all these tests called assays. This distinction between verification and validation means that they've determined that the tests are able to detect problems, but they still need to verify the accuracy of the assays. It may seem like a small distinction, but this is very important. This lack of validation could pose an issue for them during initial sales, assuming that they do pass validation, because veterinarians may not be as willing to buy non-fully validated diagnostic products. So let's look at the stock price surge we saw earlier. On January 12th, the stock hit a high of $1.30, and the reason behind this was probably the last thing that you would expect. Apparently somebody went on the site Cameo, a site where you can pay celebrities to record video messages, usually things like getting a celebrity to say happy birthday to somebody or getting them to say hi to your grandma. Well, somebody paid Carol Baskin from Tiger King to record a message promoting Zomedica. That led to an insane amount of volume, with more than 1 billion shares traded on January 11th and then 900 million shares on January 12th. From February 5th to February 8th, there was another huge run-up, but there doesn't seem to be any particular news or developments that caused this. Now, this was right after the initial GameStop short squeeze, and the market was looking to find growth stocks to pile into. It seems that this run-up was the result of a big pump, and they've since fallen back down to its pre-pump price at $1.30. So let's look at how they're actually actually performing. So looking at the income statement, they have yet to record a single dollar of revenue. This basically means that they haven't recorded any sales yet, and over the past 3 years they've lost somewhere between $17 to $20 million each year. I don't necessarily look at this as good or bad, but it just means that we don't have a proven track record of sales. When we look at their expenses, the bulk is split between research and development and general and administrative costs. They explained in their 10K pretty much what you would expect, that research and development costs are a result of developing TrueForma, and the reduction in costs are due to winding down the research, and that the general and administrative costs were primarily from salaries and stock-based compensation. When we look at the balance sheet, they reported $66 million in assets to $15 million in liabilities. This gives them $51 million in equity. They only reported $2 million in debt, and surprisingly most of their assets are actually cash with $62 million. So overall, this is a pretty healthy balance sheet. Okay, so let's try to figure out what the stock might be worth and how it relates to the current share price. So if we look at the current forecasted revenue and income, they're forecasted to earn $4 million in revenue in 2022, and then in 2023 they're projected to earn $15 million in revenue. They're also forecasted to lose a penny a share in 2022 and then break even in 2023. Now we have to be very hesitant of these forecasts because there's currently only one analyst, H.C. Wainwright, covering them. Typically, I like to see something in the double digits for the amount of analysts covering a stock. So right now the stock is trading at $1.30 per share, which comes out to a total market valuation of $1.2 billion. Now this is 85 times the one single revenue estimate we have for 2023. This is a huge number. If we use my price to sales formula and estimate a reasonable 10% profit margin, it would take 58% annual growth to hit this number. What makes this tough is they currently forecast the global companion animal diagnostic market to reach $2.8 billion by 2024. This means that they're currently trading at a valuation at roughly half of the entire medical diagnostic market, and keep in mind that this market includes the entire diagnostic testing market, which are also tests that TrueForma doesn't even perform. So based on the fundamentals, I find it really hard to pay $1.2 billion for a company that's only forecasted to earn $15 million in revenue in 2023, especially when the total diagnostic market is only projected to be worth $2.8 billion by 2024. And then the only product that this company has isn't fully validated and only tests for a fraction of that $2.8 billion total market. It just seems that there's no margin for error at this current price, and I think that the only way buying the stock makes sense is if you're looking at it for a short-term trade. So let's take a look at the technicals. Looking at the overall chart, it seems like the stock has really been sliding since mid-March, and I don't quite see strong support for a bottom yet. The RSI is down to 38, which is decently low, and the MACD seems to be showing that negative momentum is slowing. However, when we look at volume, it seems that there was a good spike when the stock tested $1.17 on April 6th, but then the stock fell without much volume supporting the reaction. To me, this would indicate that a breakout isn't imminent yet, and I would be really watching for a solid bottom if I was looking to make a short-term trade out of this. I'm not sure we've really seen the bottom yet, and I'd be really interested to see what happens when the stock tests $1.17 again, because if we got a strong reaction, it could indicate a possible double bottom. So now the big question is this stock trash or treasure? Now I would say it's a little mixed. If you're looking for a long-term buy and hold business, this is clearly trash. While the overall financials of the company are pretty good, and I actually do like the business model, it's just the valuation is absolutely astronomical for the stock. It's priced without any room for error. But if you're looking for a short-term stock to read the technicals and try to buy a breakout, it could be treasure, but we're still waiting for some signal indicating that it's about to pop back up. When the company announced that they were going to release TrueForma a few weeks early, the stock ended up dropping a bunch, and this really should have been seen as a good long-term sign for the company. To me, it seems like reality isn't what dictates Zomedica's stock price movement. It's more about volatility and volume. Now, volume seems to have trailed off since February, which could indicate that a lot of people who helped pump the stock up have moved on to something different. Okay, so that's the video. I hope you found it helpful. If you did, make sure you hit the like button and let myself and the YouTube algorithm know. And as always, thanks for watching.